From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 26, 2017. In a moment we're going to be taking a look at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. But first I want to recap yesterday's trade suggestion, trading the reversal pattern, the head and shoulders on the euro dollar. Yesterday we were looking for a rally into resistance, into the top of the head and shoulders pattern, closer as possible that we could get to the shoulder level of the head and shoulders. I want to jump real quick over to this other chart that kind of gives you a better idea of that head and shoulders. The blue line being the shoulder level, the black line being the falling highs along that shoulder level. The red line, of course, would be closer to the neck level of the pattern. Of course, we would love to see a break of that and continuation lower. But the blue line is probably our most significant area that we want to study as resistance, selling towards that resistance, targeting supports, and hopefully eventually the continuation of the reversal. So anytime it jumped up there towards the black line or the blue line, we wanted to look for a short opportunity. Take it back over to the other chart. We zoom it in a little bit here. We're getting into this purple and green shaded area. Take a look, the green zone. We jumped up there yesterday. We saw the market hold there as resistance. For those of us in the trade room, we were talking about going short into 1.1820. You can see I have that trade going at the bottom of the chart, 1.1820. We're locking in profit now as it goes lower, sitting currently 56 to 60 pips of profit, of course boosted by the ECB today, but pressuring it lower. But definitely looking for it to head on back down to the blue zone and continue that reversal from the head and shoulders for the euro dollar. Okay, let's move on over to the AUD/USD, Australian US dollar. Over the past 4 or 5 days, we have seen a significant sell-off on the Australian dollar. We'll see that here in a moment on the right-hand side when I zoom in. What I zoomed out so we can see some history around the green shaded area, 77.25.45. Look to the left where the black circles are. What is the significance about the green zone back here? Resistance, 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 and reversal. So we know historically, this is fact, this isn't anything I can make up, it's statistical fact, that when the market's underneath the 77.25.45 level, historically it has found resistance. Now sure, it got above it, by the way, found support there eventually, but is statistical area where the market has made a trading decision to buy, sell, enter, or exit. In this case, on the left-hand side as resistance, where buyers exited, sellers entered, the market turned lower. The important part about that is that's where we are today. We're just underneath that same green shaded area. We've pushed underneath it. We've opened underneath it. We've even opened and closed on the 4-hour time frame a few times. Let's zoom it in one more time. Take a look at the blue circle where we found support at that same area, the same green zone. Support at the blue circle, bottom of the red and blue trend line bounced up. So we know with fact that the green shaded area is where the market has made trading decisions before to buy, sell, enter, and exit. So if the market is doing that, people that are in control of the market are doing that, maybe we want to do that as well as people that are not in control of the market. So looking at 77.25.45 as a potential entry point for a short today. As long as it's under it, we don't want to buy it. But underneath it, we may look to go short, targeting, again, our first support, which is the blue zone. Of course, that's pretty clear the past 2 days. But if it can get through there, of course, we would look for the continuation of what is currently a downtrend. The risk is pretty simple. The risk is that it breaks back above the green zone and goes back up again. So we want to be watchful for that. Let's take it down to the 4-hour time frame. There's that same green shaded area, blue shaded area. We can already see support here. Again, as long as it's under that green zone, I don't think this is a good idea to go short. I mean, go long underneath the green zone. Sorry, no, I don't think it's a good idea to go long under the green zone. I think more likely we would be looking to go short on any rally into that green zone. Now, if we just take a simple fib, let's take Fibonacci from the last high, just right here at the orange zone, down to our current low. Interesting enough, the 236 sits right there at 77.30. So if we're looking to go short, we want it to come up here into the green zone, reduce our risk. Why? Why does that reduce risk? Our stop loss is just above the green zone. That way, if it gets above it, we get out. So we want it to come up to the green zone, give us some clue to resistance and reversal, target the blue zone. That makes our profit target much larger as well as if we wait for it to come up to the green zone, and of course, a push through the blue zone, we look for further profit on down into the low 7600s. And the risk here is to break above the green zone. So don't buy it unless it breaks above the green zone. But looking for an opportunity to go short here into the mid 77s for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.